This video is sponsored by Pionex, but more on that later. Hey everybody, it's Eddie here, and in this video, I'm going to be giving you a complete breakdown of my entire crypto portfolio, and I'll also be talking about crypto portfolio risk management. I think this is a topic that's not really talked about a lot, so I do want to cover that. So if that sounds interesting, definitely stick around. Also, just a reminder that I'm not a financial advisor, nor anything that I share in this entire video financial advice, so make sure you also do your own research, due diligence before you decide to move forward. All of this is pretty much my personal strategy, how I like to navigate through the markets. So this is just one person's opinion. So right now, this is my portfolio. As you can see, the majority of my portfolio is made up of Bitcoin, around 47%. Second after that is going to be Ethereum, making around 25% of my entire portfolio. Third being Cardano, making up 8%, and you can see the rest following. Now, the way that I like to structure my crypto portfolio is to have anywhere between 45 to 50% in Bitcoin, 25% in Ethereum, and 25% in altcoins. Generally, I like to hold much safer quality altcoins like Polygon, Polkadot, Chainlink, etc. But within that 25% of the altcoin section, with 5% of it, I like to take on a little bit more risk or be a little bit more experimental, try crypto bots, rebalancing bots, or hold on to different altcoins that I don't really typically invest into. So the general idea is to be very low risk. Now, the reason why portfolio risk management is really important is because you're trying to minimize your risk to the downside, but also trying to maximize your gains to the upside. You know, there is no such thing as low risk and high reward. There's only high risk, high reward, or low risk, low reward, but there is a good balance. For example, let's say that your entire crypto portfolio consists of 100% Bitcoin. Technically, that is the low risk, low reward route. Also, it's very conservative considering the entire crypto space. But if you want to take a little bit more risk, then you would do something like 80% Bitcoin, 20% Ethereum. You want to take on a little bit more risk, then you would do 50% Bitcoin, 50% Ethereum. You get my point, right? The more exposure you have into Bitcoin, basically you're protecting your portfolio. The less Bitcoin you hold, basically you're increasing your risk. But just holding Bitcoin and Ethereum in your entire crypto portfolio is still considered a pretty conservative, safe route in my personal opinion, rather than holding a different altcoin. Now, the app that I'm using to track my entire crypto portfolio is called CoinStats. It's an amazing app. If you guys are interested in signing up, I do have a referral link down below where you can save 41% off your entire subscription. But the number one beginner mistake that any person could make is by saying things like, I own 1,000 Cardano, I own 2 Ethereum, 20 Polkadots. It really doesn't matter how much of what you own. For me, I don't really care about the number of Bitcoin or Ethereum or Cardano or Rose or BNB that I own. For me, it's all about the percentage allocations. And depending on the percentage, that's going to help me determine what to invest more into and what not to invest into. Because the most common question that I also get is, Eddie, what should I buy? What's a good deal right now? And people that typically ask those questions don't have a portfolio strategy or don't have any strategy at all. For example, right now my Bitcoin allocation is around 47%, right? But there was a time when it went as low as 42%. At that point, that meant that my exposure to altcoins were much higher, which meant that my portfolio was entering a higher risk territory. Therefore, I stopped on accumulating any sort of altcoin, including Ethereum, and just focused on accumulating Bitcoin every single day. Once it made up around 45, 46, 47% of my portfolio, that's when I was like, all right, what should I invest into next? If Ethereum drops down to like 24%, accumulate a bit more Ethereum. And I also don't have to add any more altcoins, but I can increase a little bit more exposure to my experimental portfolio, which makes up around 5% of my entire portfolio. If you look at my portfolio, 1.8% of my portfolio is GUSD. I know it's technically a stable coin, but the way that I inputted the data is for that 1.8% to be my trading bot within my Pionex account. Also, we have the 1.4%, which is the other sector that is also trading bots with my Pionex account. If you guys are interested in signing up for Pionex, I do have a referral link down below. You can save a ton on your trading fees. They have one of the lowest trading fees that I personally know of. And the reason why I love using them is because they have so many different token options, along with amazing trading bots to strategize your entire investment decision. So around 3 months ago, I created 3 different trading bots within my Pionex account to talk about risk management. So I think this is going to be a perfect example what that looks like. But my first bot is down 41%. My second bot is down 44%, so 3% more. And my third bot is down 47%, so another 3% more. For bot number 1, Bitcoin made up 40%, Ethereum being 30%, and the rest of the 30% being Cardano, Polkadot, and VeChain. On the second bot, we had no Bitcoin. Instead, we replaced that with Ethereum being 40% of the portfolio, 20% being Cardano and Polkadot, and 10% being Matic and VeChain. And with bot number 3, we have no Bitcoin, no Ethereum, so obviously this is more of a higher risk, higher reward approach. 40% being Cardano, 20% Polkadot, 15% Matic and VeChain, and 10% XRP, just to have a little bit more risk but high reward. At the end of the day, these are very speculative, right? They may go to zero, they may not even reach to their all-time high, or they might do like a 20-15x, who knows? But it's very clear that when you don't hold any Bitcoin or Ethereum, you're going to experience more downside during a correction. So right now, this portfolio is down 47%, the one with just Ethereum is less, 44%, and the one that I'm holding Bitcoin and Ethereum is only down 41% versus the 47%. Now, maybe some of you watching this video are actually down 50%. What should you do in those moments? That is going to be completely up to you, but I'll tell you what I will do. The last thing that I would personally not do is sell at a loss. Instead, I would increase my position by adding more to dollar cost average down. Because if I sell at a 50% loss, number one, I only have the half amount that I invested. In this case, I invested $1,000. I would only get $500 back. Now, if I want to recover my $500 loss back, then the market has to do a 2x versus if I just held, the market just has to do a 50% increase. In other words, you have to work much harder, or the market has to work much harder for you to get your money back. So the next best thing for me to do when things are down like 40 to 50%, what I would do is double down on my investment. Now, I just went ahead and deposited $3,000 into my Pinex account. I'm going to be investing $1,000 each. So $1,000 into option number 3, 2, and 1. Also, if you're interested in learning more about Pinex and how to use their platform, I do have a dedicated playlist link down below. But let's go ahead and deposit $1,000 in. So for option number 1, or trading bot number 1, we're down 41%. If I go ahead and click on add investment, I'm going to go ahead and add in $1,000. So in other words, I'm dollar cost averaging down. I'm going to click on confirm. And now my trading bot number 1 is only down 20% versus the 40%. So basically what happened was I bought up here way too high. I dropped down 40%. Dang it, I'm in a loss, right? So what did I do? I added more to my position. I bought low. And once the market starts to recover, that profit is going to make up for the losses. In other words, I'm going to cancel out much sooner than later. The market only needs to go up 20% for me to break even versus the entire 40%. So that's why it's also important to have cash on hand to buy the dips and to average down. For portfolio number 2, same thing. Click on the 3 dots, add investment. We're going to go ahead and add another $1,000. Okay, confirm. And now I'm down 22% versus the 44%. And we're going to do the same thing for bot number 3. Go ahead and add the rest of the 1,000. Confirm. So right now I'm down around like 47.4%. So I'm going to guess divide that by 2, which is going to be around 22.23. 23.5%. I think it's around 23.5%. So down 23.7%, not bad, much better than the 47%. Now, what if, a couple months down the road, the market decides to continue correct and go lower, and all these portfolios decide to go back to the 40 to 50% range? Well, that's another video for another time, but the simple answer is I would still dollar cost average down. Now, a couple months back, I did set up another bot called the Arbitrage Bot. Now, this bot is very interesting, right? Because it's a very safe and conservative way of investing. It's kind of like earning interest on your stable coins. Right now, I'm earning around 7.8%. That number increases depending on the market conditions. I made a total of $316 in the past 145 days. And this bot is arbitraging Ethereum. I did create a separate video on this. Again, it's in the playlist link down below, but I'm actually going to close this one out today because I'm going to set up a new bot with you all. So we're going to click on the power button. Are you sure you want to close the ETH spot futures arbitrage bot? Yes, I do. Confirm. And now my available balance is $10,326. Now, the reason why I closed this bot out is because according to my portfolio and my strategy, I can increase my exposure to my experimental or high risk portfolio, which makes up around 5% of my entire entire portfolio. All of this will make sense in just a second, but I'm going to go ahead and click on bot. And the bot that I'm going to be creating today is going to be called the ETH Moon bot. Now, I've never traded this bot, but it sounds really interesting according to what their website says. And I'm going to go ahead and give it a try, experiment it, and give you guys an update a couple months later. Go ahead and click on ETH Moon, total investment, $10,000 flat, done, and create. So here's how this bot works. 86% of my funds, so $8,600, is going to be directly invested into Ethereum. And then with 13.9% is going to be held in stablecoins, so around $1,390 held in stablecoins. The Ethereum price range is going to be from $1,000 all the way up to $10,000. So from $1,000 to $10,000 Ethereum, it's going to set up 500 grids. So basically, it's like setting up a grid trading bot, but in this case, the ETH Moon bot has already set the settings for you to become the most profitable. The idea of a grid trading bot is to buy low, sell high, buy low, sell high. Anytime those low grids are triggered, it'll automatically buy for you. Anytime the price goes back up, it'll automatically sell for you. With these grid trading bots, you won't really see the results immediately. We're talking about like a day or two. You kind of have to give them some time, give it a week, give it 2 weeks, give it a month, and then eventually you'll see some profits coming in. And typically I like to set these grid trading bots when the market is down. I don't like setting up these bots when they're high up because it's a little bit more risky. When things are down and low or kind of in the middle, that's a great place to start in my opinion. Because basically I'm investing $8,600 into Ethereum. Do I want to do that when Ethereum's at $4,000 or the mid $2,000? So I'm going to go ahead and click on OK. And now my ETH Moon grid trading bot has been set. I'll keep you updated over time. So this is part of my experimental portfolio. So it's sitting around $15,100. So within my Pionex account, I'm going to go ahead and click on add transaction. Click on search GUSD and go ahead and add an additional $13,000. And that is because I set a $10,000 ETH Moon bot plus an additional $3,000 on each of the bots. Click on add. And now the entire percentage of my portfolio is a little bit different. My Bitcoin percentage decreased a little bit. Ethereum is no longer 25%, but 24.7%. GUSD makes up 3.44%. And the other category makes up around 1.4%. So that is also experimental or high risk. So if we grab GUSD plus other, so 3.44 plus 1.41, that is equivalent to around 4.8%, almost 5%, which is in my portfolio risk area. And so this is how I personally manage my risk when it comes to investing into the entire cryptocurrency space. My portfolio tells me what to do, not based off of my emotions. In this case, now my portfolio is telling me, Eddie, you should consider accumulating a little bit more Ethereum, a little bit more Bitcoin, but I'm not going to be accumulating more Ethereum just because I set up an Ethereum bot, right? So technically I do hold Ethereum, just not directly. Now I hold my crypto across 11 different exchanges and apps. You don't have to be like me. I just do that for my own personal reasons. But if you want to manage it in one place, I think Pionex is also another great alternative. For example, let's just say that you want to create a portfolio, 60% Bitcoin, 40% Ethereum, and you don't really want to manage it and you want to try to maintain that balance. Well, within Pionex, you actually can do that, right? I'm going to go ahead and click on create a bot, and it is called the rebalancing bot. Click on create, and it's going to give you two options, dual coin mode and multi-coin mode. Dual coin mode, if you choose that, you can choose up to 2 coins and it's going to split it evenly 50-50. But because I want to manually make it like 60-40, I'm going to click on multi-coin mode. Click on customize, add a new coin, Bitcoin and Ethereum. Confirm the 2 coins, and from here I can manually input the percentage, right? This is really cool because I can do something like 70, and for Ethereum I can do 30%. Done. And this rebalancing bot is going to maintain the 70% 30 ratio at all times. For example, if Ethereum ever outpaces Bitcoin, it's automatically going to sell profits from Ethereum and put that into Bitcoin. Vice versa, if Bitcoin decides to take off, then it's going to automatically sell some of that and put it into Ethereum so that your portfolio is always balanced. So in my opinion, this is another great alternative to managing your risk of your portfolio. For me, I'm going to increase my exposure to Ethereum to do something like a 60-40. I I think Ethereum is a great project. It's definitely a much more safer altcoin alternative than other altcoins out there. Also, you need a minimum of $100 per coin. So in this case, because I have 2 coins, I need a minimum of $200. If you do 3 coins, then 300, 4 coins, 400, right? So the max amount that I'm going to do is 326. And then I'm going to have it set to rebalance every 4 hours. So basically what's going to happen every 4 hours, Pionex is going to make sure that 60% of my portfolio is sitting in Bitcoin and 40% in Ethereum. And the bot has been set. So this method is pretty much just like buying and holding, but it automatically does a rebalancing for you. Well, with that said, hope you all enjoyed this video. If you did, please give it a big thumbs up. If you have any questions or comments, leave it down below. Consider checking out the Patreon group link down below as well. That is where I post content on there every single day that I am not on my public channel. Also, hopefully this video was helpful. Hopefully it gave you some insight on how to move forward and strategize. I know investing into the entire crypto space can be extremely stressful at times. Sometimes you wonder, did I make the right decision? Am I making the right decision? Sometimes you really don't know. But again, this entire video was about portfolio risk management. So if you position your portfolio and you manage your risk, then it doesn't have to be stressful. I'll see you guys in the next video over. Good night, good morning, adios.